Okay, so what kind of situation do we have at the moment on NZD CHF? Now, from a weekly perspective, what do we have? We have a market that has created an impulse and a correction. And what do you expect? You expect the market at least to start to make a new impulse to the downside. Now, from a daily perspective, if you remember from the last analysis that we made, and I got a lot of requests to make an update on it, what did we have? We have a market that basically has created this overextended W formation, and we said after an overextended W formation, it's a very good idea to be looking for possible shorting opportunities on NZD CHF for a move to the downside. Now, at the moment, what happened? The market made a move to the downside, and it seems that it will, and it has basically broken back below this structure. Now, it would be great to see the market go even lower before making a nice retracement. In that way, we would basically have a very clean head and shoulders and impulse correction and impulse pattern to the downside in confluence also with a nice Fibonacci taken from the high to the low. But that is something that we will see later on if the market will go for a retest of structure immediately or first go a little bit lower. So at the moment, the market basically has behaved in a very textbook manner, exactly as we wanted to see. Let's see where we can be looking for another opportunity on this pair. Now, if we go and see what is the situation from a COT perspective, so what hedge funds are doing at the moment on the NZD and what they're doing at the moment on the CHF. So let's go and get our data and see what kind of situation we're having. Now, from a CHF perspective, what we can see, overall, not much change. Positions more or less remaining the same. So nothing really interesting that we can take from a CHF perspective. But from a NZD perspective, definitely things get a little bit more interesting. Why? Because we can see that overall, during the push to the upside, new shorts have been added. In fact, not only the longs during the push to the upside is something that anyway you expect. Therefore, the push to the downside from the overextended W formation was definitely expected, and we can be looking for possible more continuation to the downside if we will see proper confirmations. So, going back basically to our chart to see what kind of situation we have, how we will be approaching this with students. Now, from a weekly perspective, we can expect more continuation to the downside, but that means nothing, right? It only means something if the market will show us that it actually wants to continue lower, and how the market can be showing us that. If the market will make a retracement back inside of this area, and inside of this area will shift basically from a bullish market, from a 4-hour perspective back to a bearish market, and provide to us one of our valid entries, then we will be looking for a nice short, for a very good risk to reward and very good probabilities for the move to the downside. Now, with the last basically analysis that we made, we had basically highlighted this W formation and we wanted to see the market move down. That is what happened. Now we want to see a retracement back inside of this area, and if the market will provide to us one of our valid entries, then we will be taking this short. If the market does not provide one of our valid entries, then it means that the market just wants to continue higher, and from a 4-hour perspective, everything will remain bullish. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.